Morning. Top Gun here, Thursday, February 18th, about 4 a.m. Pacific Standard Time. This is the YouTube pre-market commentary. All right, let's get into it. Jim Bianco, the bull case. So the great macro strategist Jim Bianco was on Trading Nation, CNBC's Trading Nation with Seema Modi yesterday morning, and he talked about how, yes, this is a mania, but it was a mania in the late 90s, and it lasted a lot longer than anybody thought. In fact, Alan Greenspan, then Fed Chair Alan Greenspan, called the market irrationally exuberant on December 5th, 1996, and the NASDAQ didn't peak until March 10th, I believe, of 2000, more than 3 years later. So Bianco is saying, we're somewhere in that stretch. This is likely going to continue longer. I'm not totally persuaded that's true, but that is the bull case. Now, Bianco also makes some caveats saying that, it's hard to hold on to. You can make a lot of money in an environment like this, a mania, but you could also give it all back very quickly. So it's the trick is to hold on to your profits. And he's also concerned about rising interest rates and inflation in the second half of 2021. Excellent interview with Seema. Check it out. Now, Kitty technician Aaron Jackson is also bullish, but for the wrong reason. He is a true believer in this market. And in his blog, the Cathie Wood Report, he talks about how the explosion in information and access to information is what's driving this bull market. Now, what he's referring to clearly would be the internet, scientific progress, those types of things. But my question to him is, did this just start in the last 11 months? No, the internet has been expanding access to information for more than 20 years now, and we've been making scientific progress since the scientific revolution more than 400 years ago. So why all of a sudden in the last 11 months? It's not because all of a sudden innovation has hit an explosion. What's going on is the Fed has injected $3 trillion into financial markets between mid-March and early June of 2020, and it's created a psychological mania among investors where now with stocks levitating, they feel like they can't go down. So Cathie Wood conveniently was on CNBC's Fast Money Halftime yesterday, and she was talking about Palantir, which reported earnings on Tuesday morning. Now, Palantir is a data analytics firm focusing on counterterrorism for the U.S. government, but it also does some data analytics for private companies. So it's definitely an innovative and interesting firm. The problem here is price. Even after getting drubbed to the tune of about 15% on Tuesday and Wednesday, Palantir has a $48 billion market cap with $1.1 billion in revenues in 2020. Now, on Tuesday morning, they guided 2020 revenue growth to greater than 30%. So let's give them the benefit of the doubt and say 35, 36%. So 1.5 billion in revenue this year. We're still talking about 32 times forward sales. Now, so innovation is great. Innovation is, in fact, what drives economic growth. But the problem is that Palantir is not a sure bet. They were barely profitable in the fourth quarter. I don't think they were on a full year basis. It's an early stage company, but you're paying $50 billion for it. I just don't think you can justify those kinds of prices for which is pricing in a guaranteed success for, in reality, an uncertain success. Now, we saw the same thing play out with another Cathie Wood favorite yesterday, Shopify. So Shopify reported a great fourth quarter yesterday, Wednesday morning, with revenues up 94%, and they made a nice profit, actually, with adjusted diluted EPS of $1.58. But the stock sold off 3.32% on almost 3 times average volume, because at the price that it's priced at, all these great results were already priced in. Even after yesterday's hit, Shop is trading at 59 times 2020 revenue, even when I back out the $6 billion in net cash they have on their balance sheet from their market cap. So I love Shop's business of empowering small businesses. Palantir is very interesting to me in terms of their data analytics, counterterrorism, how to apply, better analyze data for companies. But my problem is paying these kinds of prices for companies that are this early in their growth stage and that are really not profitable entities yet, and that are priced like great successes, but it's yet to be proven. So obviously this isn't a problem for Cathie Wood. So in conclusion, I just want to say that, go ahead and speculate in this market, because like Jim Bianco said, you can make a lot of money, but just understand what's going on. Understand that this is the triumph of liquidity over fundamentals, in the words of Citigroup's Matt King. And don't be a true believer like Aaron Jackson and Cathie Wood, think this is all about a tremendous exponential increase in innovation that's all of a sudden happened in the last 11 months, corresponding with the coronavirus pandemic and the government's enormous stimulus reactions. So you can make a lot of money in a short time, like Jim Bianco said, and if you understand the dynamics, you might be able to hold on to it, but this will end badly, and nobody knows when.